Hey, what's good, guys? So there's a live market. I just want to show you guys some of the smart money concepts and some of the indications of whether to take a trade or not. Smart money traps. So smart money, I'm quite sure you guys know that smart money is the one that is moving the market. Each and every time when you're trading, there are certain areas where you have to enter the market as smart money pushes the market to move in the direction of the trend. So let me just take down all the objects and show you guys how I actually normally take my trades. So finding the direction of the market is very simple. To know where the market is going is very, very simple. But to enter a trade accurately is difficult, and it's one of the most difficult things that I've seen with some of my students. So I'm just going to begin. So what you guys call trend lines, most of you guys are familiar with it. Trend lines are actually, smart money concepts. It's liquidity. When you look at trend lines, that is liquidity. That is the liquidity that the market needs in order to move in the direction of the trend. So given this market, if you're my student, you know what's happening by just looking at this market. So first of all, before I do anything, I check the direction of the market. So I scroll down, check the direction of the market in order to determine what is about to happen next. So this is what you guys call support. So this is your support area. If you're a beginner in Forex, if you have basic knowledge of Forex, you call these support areas. So in order to trade in these positions, you need to see where the market is going. So you need to, if you're trading support and resistance, obviously you have to put your marks in this position. So this is our resistant area. So as you guys can see, there's a resistant area. The resistant area is the highest level of price, the price ceiling. The market cannot break in that position. So the market keeps on bouncing back there. So as you guys can see in this position, the market went up. It touched this area around, sorry about that. It touched this area around here. First touch, second touch, and also if you take it to the right side, you can also see your third touch there. So mostly when the market gets to this area, it's definitely going to retest because this is an area of price interest. So it's an area of interest. That means the market is definitely going to react when it gets to this area. So now, in order to check my liquidity, I don't just go and start selling there because it has reached in that area. So I check for so many things. I check for what you guys call your trend lines. But we don't call these things trend lines. We call them areas of liquidity. This is the area where the market gets into. This is the area where smart money gets into, and then definitely look for sell or buy positions. So now, after reaching this area, I go down to my 4 hours. 4 hours is giving me an idea of what's happening inside the market. So as you guys can see, inside this market, we are only looking for buy positions now. Since this is the highest peak of the market, I'm not expecting to sell in this area up unless it gives me a signal to sell. I'm only looking forward to sell somewhere around here. This is the highest static liquidity. So this is the highest form of liquidity that the market is highly likely to reach before it sells and definitely drop in price. So in order to check if I should buy or sell, I have to see what's happening on the market. As you guys can see, this market is definitely buying. So why did it actually buy, and where was I going to take my trades? So the smart money trap is in this area. This area is what you guys call your support. So in this area, there's an area of liquidity. The market is definitely going to bounce in this area before taking a direction. So I look forward to this area and check what's actually happening before I take my trades. And also, you guys will be wondering and asking yourself, if this area is very important, why did the market actually drop below this area and then gets to this zone around here and then start buying instead of buying here? So this is where it comes to smart money concept, smart money traps, in order to understand where to take your trades. Guys, you need to understand that smart money is also like you. So they depend on on market structure in order to get in the market. But the only difference is that there are certain zones that they take. They don't just enter anywhere. So I'm going to scroll down to 15 minutes. 15 minutes is very important for me because I use it in order to time my entries. If you check in this position where the market was moving here, the market started from this direction and dropped in this area. This, oh, by the way, this is also called internal liquidity. It's static liquidity. It's internal. It's inside the market structure. So we call it internal liquidity. As you guys can see, there was a first touch in this area, and then there was a second touch in this area. So if there's second touch, third touch, fourth touch, this tells you that this thing is inside the trend. So if it's inside the trend, we are only looking for it to break structure so we can take our positions. And most importantly, when the market breaks structure, guys, remember to always put your stop losses a little below your static liquidity, which you guys call your trend lines. So this is where you're going to take your trades and put your stop loss here, so that even when it takes you out, you don't lose anything at all. So this is what's happening at the moment. But if you go down to 5 minutes, definitely you're going to get a better understanding of what to do in this kind of market. So the market has been moving sideways here, and you guys can see, if you look at this area, this is another static liquidity. This is another static liquidity. You can also take your trends in this position. You can also take your trades in this position. Wait for the market to actually buy. If it doesn't buy, put your stop losses here. You don't lose anything at all. That means you're going to wait for another position, because in most cases, this can also turn into an inducement. And inducement is an area where smart money traps people that actually get into the market. It traps people that get into the market. When they get into the market, takes them out, and then use those sell positions in order to get a buy side liquidity. So as you guys can see here, the market actually created an inducement. So I was going to see that it's an inducement. So in this area, remember guys, when you're trading against smart money. So it's very important to use risk management. So use your risk management. You are not going to miss more than 2 times if you use this strategy that I'm using. So if you put your risk management, you put your stop losses below, it takes you out. Wait for it to create another liquidity pool. As you guys can see here, there's a liquidity pool. And then after this liquidity pool, you take your buy positions, and then the market goes up just like that. So anyways, I was just giving you guys an idea of what's actually happening in this area. Why is the market moving like that? What did the market look like it's doing a liquidity sweep here when the market is actually inside the liquidity? So it's very important to check your liquidity on 1 hour, but to go down to 15 minutes to analyze properly and take your trades. So in this market, this is what I'm looking at. I'm actually focusing on buy positions. So I'm going to wait for it to create a liquidity pool area where I'm going to take my buy position. So it's definitely going to create it again. So if you go to 5 minutes, the market is going to fall and then create the liquidity pool. So if it broke in that area and you took it late, that means I was going to wait for another pool here. So this is the pool. As you guys can see, it's what you call your support areas, and the market has been bouncing in this area. And then after this strong bounce, I take my buy positions and I go up with the market just like that. So I'm only looking forward to buy positions. I'll wait for this market to get to this area, because this looks like liquidity, but it's an internal liquidity. In most cases, for 100% accuracy, more accuracy, I wait for the market to actually break this liquidity here, because this liquidity is still inside the channel. So I'll wait for it to break up until it gets to this area around here, gets to the external liquidity, and then look forward to sell position. So at this point in time, US30, I'm only expecting this market to buy up until it reaches this zone here, and that's what I'm going to take my sell positions. So this is what I'm seeing at US30 in the moment. I'm not expecting a sell at any time. So it's going to look like it's breaking in this area up until it gets to this zone here. So always remember, you check for 5 minutes and 1 minute, check the trend lines, what you guys call trend lines, check for support and resistance areas in order to take the trades. So your 4 minutes daily is only an analysis in order to see where the market is actually trending. So it's an analysis to check where the market is trending. When it reaches that zone up there, that's where I'm going to look for sell positions.